Good afternoon. Today is Thursday, September 21st. The time right now in Singapore is 12:07 in the afternoon. Overnight, we have the release of the FOMC decision on interest rates. The Federal Reserve actually held interest rates unchanged at 5.5%. So the Fed fund rate right now is between 5.5 to 5.75%. So this is actually good for the market in one sense. But however, the Fed chairman during his press conference gave us an idea that inflation is still likely an issue, and he's likely to keep interest rate higher for longer. And so that actually soured the sentiment immediately after his press conference. And we can see as a result, US equity prices actually fell back. Before that statement itself, we can see US equity actually attempted to rally, but all was undone after that statement. We can see the Dow Jones itself, as far as the micro E-mini futures is concerned, we can see prices right now is below the 34,700 range. Last traded in electronic trading is 34,674, and this is likely to see prices going down further towards the end of the week. I think there is a good chance the market will actually go below 34,062 to somewhere between 33,800 to 34,162. So do watch out for further losses in US equity markets as we go into the weekend itself. And today we have the Bank of England decision, which is going to be due at 7 p.m. Singapore time. So do look out for that as well, because last week the ECB hiked interest rates to 4%, which is the highest you have ever seen since the creation of the single currency. And the president of the ECB, Christian Lagarde, actually says that for the time being, I think this is all they will do, and that caused the euro to actually come off. And maybe we will see the same thing for the Bank of England. However, I do have a different take later on when I touch on the British pound. I will give you my view of the sterling itself. Now, over in the S&P 500, we can see that prices has been coming down, and we can see that the market hit a pocket and has been coming down, and it looks like it will go down further. Last traded in electronic trading was 4,435 and the 0.5, and it looks like we may actually drift all the way down to 4,350 to 4,400 levels. I think this is a real possibility. But if the market do breaks the 4,350, that will be something altogether. Okay. Over in the Nasdaq 100, we saw very steep losses following the statement by the Fed chairman. Market came off a pocket of around 15,365 to 15,460 and three-quarter, and it looks like it's likely to drift even lower as we are speaking. Target right now for this move is to retest the 14,600 levels that we've seen and so far, and there's a likelihood that it may even go lower to 14,470. So do look out for further losses in US equity markets. Over in Hong Kong, we're seeing a sharp drop as a result of the losses on Wall Street itself. Hong Kong itself looks like it's the Hang Seng Index looks like it is likely to go even lower, and I think there is a real possibility market will actually target this range here at 16,000 points here. So this is a real possibility. Do look out for further losses, perhaps by another 1,000 points or so in the Hang Seng Index. Over the Nikkei, we see similar losses. The high traded so far this week was at 33,450, and at the rate the market is falling, it looks like it may actually go into this bracket of prices at 32,140 to 32,320. Whether it can hold remains to be seen, but if it fails to hold, then the next level will be a move down to the 31,500 range. Okay. And over in the dollar remains very well bid. We see that there was a major reversal going into the FOMC. The dollar was actually coming off, but then you can see that there was a marked reversal, and price shot all the way up to 105.38. And now this is what we saw this morning, which is within this bracket of prices which I've highlighted previously at 105.34 to 105.87. Now this is where the danger lies. There's a real risk that the market may actually top up somewhere within this range here. So anything above 105 half is definitely going to invite some kind of profit taking, and this profit taking may actually see a move back all the way to 102 levels. So do watch out for a big move in the dollar index in terms of a corrective pullback. Okay, but longer term the dollar should be strong, but what we are concerned right now is that the dollar index has been rallying for quite some time now, and without any significant pullback. So I think the market is due for a significant pullback, first to test the 104 levels with a bounce before going down to 102.60 levels, which I think will be the ideal trajectory going forward. Over in the euro dollar is also nearing a bottom. Prices continue to lose ground. The last traded price is 106.34 this morning, and it's likely to go down to test a 106, somewhere between 104.40 to 106. I think the market will find a bottom, and it will likely find see a technical rebound in the same manner as we see the dollar pullback. Over in sterling, like I said earlier on, today we are expecting the Bank of England to hike interest rate by 25 basis points, and this could be the last rate hike for some time. And while that is viewed to be negative, if you take the ECB's rate hike last week as a guide, because immediately after the rate hike, the ECB president came in and said that this will be the last rate, or hint that that will be the last rate hike. That take the floor underneath the euro. We saw the euro actually come off on the back of a rate hike, and the same thing could actually happen in the sterling. But I believe now there is a good chance that the market may actually hold within the 121.60 to 122.85 levels, somewhere between this 120 points range. I think the market will find a bottom before a rebound. So I'm actually quite positive looking going forward in the sterling. Now the decision by the Bank of England will be announced at 7 p.m. Singapore time, so do look out for that as well. In Aussie saw a major reversal. Market hit a pocket of prices between 0.65 and actually unraveled big time. So this is not surprising, because I talked about this level yesterday, and prices right now could actually go under the 0.63 half levels and in an extended fall in the Aussie dollars. Now, Japanese yen again traded to a new high. For this year, this is the highest it ever been since November last year. The high traded this morning was 148.45. And like I said, this is the highest since November last year. Now, this is where the danger lies. Anything above this level is going to attract a lot of attention from the Japanese officials. The risk of an intervention has increased somewhat, and because now the Japanese and the US Treasuries are communicating, seeking the US consideration if the Japanese should intervene, because I think it need to be coordinated. And if the US Treasury coordinate the intervention with the Japanese official, that will be more impactful, because on its own, the Japanese bank itself can actually move the market. But if in combination with the US Treasury, I think any kind of pullback is going to be more sustainable, and we want to watch out for any sign of that happening. Okay, over in the dollar Canadian, we can see that the dollar Canadian actually went down to a low of 133.79 last night. And remember, I was talking about this yesterday update. I said that the market has hit a bottom. Somewhere within this bracket of prices, we may eventually see a bounce, and right now we are seeing that bounce, and the bounce has been actually quite strong. We can see that so far there's a three-wave bounce so far, and target is about 135.40 to 135.90 levels. So this one has a bit more room to go, so do watch out for that as well. Okay, and in the crude oil prices has finally pulled back at $93.43 yesterday afternoon, and the price has been basically one track in the New York session. I was attempting to sell just above this level, but somehow the market never quite come to my limit sell price and actually unraveled. So this is actually building up the for the likelihood of a corrective pullback. Now, this pullback is actually corrective in nature. Ideally, I want to see a deeper pullback, but then again, we will have to see whether there's going to be any taker at the lower end. So ideally, I want to buy $85 to $86, but we will see what happened at $88.30 to $89.40, because there's a very good chance it may actually hold here and then started to go up again. For medium to long term, I think the energy prices should remain very, very firm going forward. And over in the gold market, we can see the market have a major pullback yesterday after hitting a high of $1,947 and almost 40 cents. And then this is the bracket I was mentioning yesterday, 1,943 to 1,954 levels. There is going to be a likelihood of a profit taking, and boy, did we see a massive profit taking. So right now, in the immediate aftermath, there is this support here that we have to worry about. If the market actually holds here, there's a good chance that it may actually stabilize here and actually rally. So this area here is between 1,920, 170 to 1,900 $26.26, which we already inside this bracket. So look out for possible stabilization here before the market do a new pattern. Over in silver, we see the same thing. Silver top up at $23.59 within this bracket of prices that I mentioned, and it looks like near term, this could be the top for a while. Downside, the market may actually hold at $22.40 to $22.14. So between these two brackets, the market will have to decide which way you want to go. So based on what we are seeing right now, the market obviously has a lot of selling interest around here at $23.50 to $23.60 level. And over in Bitcoin, we can see Bitcoin continue to edge higher overnight to 27,500 thereabout, which is within a pocket of resistance here at 27,400 to 28,170. So right now the market is struggling. So it could act as a kind of a cap for the market for time being. So anywhere between this bracket here and the lower end, which is going to be contained at 24,000 to 25,200, I think this is where the range will be trading for at least the immediate term. So do look out for consolidation within these two band of prices. This is all I have for you for today. In the meantime, you take care. I'll come back to you tomorrow with another update. Bye-bye.